And then we have a community of others who at any point in time can watch the replay on demand. So whether you're watching it live or watching the recording, thank you for tuning in. I hope you find value in the content. So let's go ahead and get started. So again, this is Introduction to Angel Investing. This is a new course provided by Bison Venture Partners. We have been slowly and steadily building a really diverse community of investors and entrepreneurs, a lot of individuals who are really just getting their start in this venture space, whether as a founder or as an investor. And the really cool thing about what we're up to is we want to build a community where we help everyday people in our community understand that you can also have a seat at the table. You don't have to just sit back and think that venture and startups and investing in startups is only reserved for people who are venture capitalists in their full time, or individuals who run private equity firms, or simply for wealthy individuals. We want to make sure that we break down the barriers, create some accessible opportunities, and share resources and the knowledge that we've accumulated to help others understand that they can be a part of this space as well. So today I'm going to be covering the first two parts of our course. The first being understanding your why, and then the second being all about knowing the rules and regulations when it comes to investing in startups. So before I get too ahead of myself, let me go ahead and introduce myself. My name is Gary Johnson III, and I have the distinct honor of teaching this course. And it's really exciting for me because I'm absolutely passionate about what I do. I love what I do. It is what I think about day in and day out. And the more that I learn, the more that I share. So this course is a new attempt for me of sort of packaging up all that I've learned from an investor's perspective. And again, just bringing people along for the ride, because with Bison Venture Partners, we are a firm that is built on the African proverb that says, if you want to go fast, you go alone, but if you want to go far, you go together. So a little bit about me. I am a serial entrepreneur. I worked on various different businesses and startup ideas since graduating from the University of Delaware. And all of that has given me different insights and connections and access to different resources. And I've truly developed a passion for solving problems in new and creative ways and doing things that allow me to collaborate with really cool people who just want to build a better world together. So I started this journey as an entrepreneur, then became an investor in certain companies that I've come across throughout this journey. And again, I take both my entrepreneurial experience and my investor experience, and I educate others. So I serve in a few different roles, one being that I am an adjunct professor at the University of Delaware, where I got my undergraduate degree and master's in entrepreneurship and design thinking. So UD Horn Entrepreneurship was a big player in my journey and helped me understand that this is all about solving problems. And I'm somebody who can't but help to see problems everywhere. And I just have to create things to try to solve them in some way or another. Now, I mentioned Bison Venture Partners. Bison Venture Partners is actually a firm that I founded alongside my classmates when I decided to go back to school in 2021 and get my MBA at the illustrious Howard University in DC. And we built a firm that really started as sort of a consulting group where we wanted to combine our collective talents and help small businesses and technology startups get investment ready and raise the money that they need to be able to build their products, build their suite of services, and hopefully when they're successful, contribute to the success of our entire community. So Bison Venture Partners is sort of a baby, but we have been blazing our own path and building a community of other people that we call the herd. So everybody who's a part of the herd are just individuals who see the mission, see the vision, and want to go further together. Now, prior to founding Bison Venture Partners, I started a nonprofit called First Founders Inc., where I really just wanted to help early stage underrepresented founders to get access to various resources, education, helping them understand how to build a scalable startup. Since I was somebody who, both in undergrad and grad school, sort of took it upon myself to travel across the country and study different entrepreneurial ecosystems. I really wanted to learn, what do places like Silicon Valley and Miami and New York and Austin, Texas do really well when it comes to providing the resources that founders need at the earliest stages, whether it's idea stage or they've just started up. What do they need to be successful, and what are those ecosystems doing to make sure that the resources, the infrastructure is in place? So I went out, I studied, and I came back to this little state called Delaware and decided to sort of take what I learned across the country and do something locally that was non-existent. And it was an early stage startup accelerator targeted to underrepresented founders, but accessible to everyone. And it was something that was it wasn't being done outside of universities. So we launched that with just 8 local entrepreneurs. I brought together a small cohort, and we would meet in a local co-working space every Saturday morning. And I would just share my knowledge on entrepreneurship and then also invite various guests to come in and help the founders understand, again, what they need to think about when it comes to marketing, legal, growth. And then also, if they were going to be raising outside capital, we would bring in small business lenders and venture capitalists to come in and speak as well. So it was a small test. Wanted to prove something in the local community and just serve the Delaware community first. And it somewhat very quickly turned into something much larger. So since launching our initial cohort in 2019, we've scaled to now building a global community of over 300 entrepreneurs all around the world. And in regards to resources, we've built partnerships with Techstars, which is one of the world's biggest and most successful accelerator programs that invests in early stage startups. And now we're able to actually refer startups from our community to their programs and guarantee that with our referral, they'll make it to at least the first round of interviews, which is a huge deal. We've also collaborated with University of Pennsylvania, with University of Delaware, of course, Delaware Prosperity Partnership, and even Google as of last fall. And when it comes to money, we've helped our community of founders raise over $500,000 in non-dilutive funds. So all money that these entrepreneurs did not have to repay, but they could use to grow, to scale, to research, to travel, whatever they needed to do to advance their business. And then we've also helped them raise over $3 million in venture capital funding. So we have actively supported these entrepreneurs in helping them get investment capital. So not free money, but in the world of venture, to be able to build a startup that can scale and grow to a very large size, it takes investment capital, and we've helped them raise over 3 million to date. And I believe that our community will continue to grow and will help even some of the same founders we've already helped get access to more funding. So Still early, but this is what I'm passionate about doing. So I have sort of three vehicles that I use to execute on my personal mission and vision. And with all of that, I think like a venture capitalist. So I've set these 10-year goals for myself and for my firm, which include the following. So the first is educating 10,000 new angel investors. And educating new angel investors is really important to me because since I got my start, one, being a founder myself, and then supporting other founders, I have firsthand and secondhand experience of being a founder, trying to get access to those resources and really struggling, right? But it's always the angels. It's the people who come in and help you with the resources you need to help you just go a little bit further for a little bit longer, and that makes the journey worthwhile because you know that people are out there to help you. So the reality is there are not enough people in the world actively angel investing. So it's a part of my personal and professional mission to educate new angel investors to help everyday people understand that you can actually get in the venture space and help these founders, help these entrepreneurs grow and scale with your own capital, with your own resources, your own networks, even if you're not individually wealthy today. It doesn't take a lot of money. The next goal is sourcing $100 million of investment capital to Black-owned businesses. That's really important to me. It's really important to my community because access to capital, as I have learned, observed, experienced, is the number one barrier to building a successful business. So if we're going to sort of reverse some of the inequities that exist in the world, we have to create equity, and investment capital is equity. So I personally believe that with what I'm doing, this is possible. $100 million in investment capital is absolutely possible. And as an investor, as someone who thinks like a VC, thinking big is how you do it. So in addition to that, I specifically want to make sure that we support 1,000 woman-owned businesses. I want to make sure that's very clear. I want to make sure that we strategically make sure that we are equitable when it comes to gender as well. And then with all of our efforts, helping to create 1,000 new jobs is a big goal. So just making sure that the companies that we support grow, they scale, and they give back to their communities in the form of hiring individuals coming from their communities. So job creation is a very important part of my mission. So one other thing that I didn't mention, one part of my education was actually being a scholarship recipient for VC University, which is a collaboration between UC Berkeley and a few different venture capital, like nonprofit venture capital initiatives. And that was a really amazing opportunity for me to be able to dive into venture capital, learn the ins and outs from people who are actively raising funds, deploying funds, people who have invested in some big name companies that are now listed on the stock market. Think of companies like Airbnb and Uber, things like that. And now to be able to take those same insights, that same strategy, package it up into our course and community here at BVP. Lastly, I'm going to dive into some startups, some different companies from my investment portfolio throughout this course. But just to call out a few, which I'm actually really excited about, Backstage Capital is actually a venture capital firm, and they were the first private investment I ever made. So making that investment officially made me into an angel investor and inspired me to learning their model and remixing it in our own way. So that is like the backstory of what inspired Bison Venture Partners. And then from there, I have actively been investing. I see deals. I laugh because I see deals all the time. And, you know, I have my own investment thesis, my own strategy, but I am an active investor, which we can definitely talk about later on. But sometimes you hear an investor say they're active. Realistically, they haven't written a check. to a startup in over a year or multiple years. But for me, I just wrote a check last week. So I love what I do, and I'm always excited about new deals. One other startup I want to call out is Gumroad, which uh, if you registered for this course, you likely registered through a platform called Gumroad, which is that same portfolio company. So what I'll be breaking down, and I'll be breaking it down as a whole case study, is investing in startups, investing in privately held businesses, and then adding value as an angel investor, right? Helping that company grow and scale by either using their platform, their resources, their tools yourself, or helping other people get onboarded to using those platforms. So I set up my sort of pre-orders and sales for this course on Gumroad, which I own a small piece of, which is pretty cool to me. And I think as anyone interested in angel investing, it is likely interesting to you as well. So that's sort of the model I want everyone who takes this course to use for themselves. Invest in companies and then help them scale by using their products, pushing their products, helping more people see the beauty that they've built. So, and then before I go to the next slide, also, I just got an email. I think it was just yesterday that I'm receiving my first dividends from Gumroad. So as we will discuss, investing is a long-term journey. Many companies that you invest in may never create a return for you, but a small percentage should. And Gumroad is one that I invested in. I believe it was 2020. So in a relatively short amount of time, now I am receiving some return, which is really great, really awesome to see, and just inspiring me to, again, keep looking for great opportunities where founders can actually deliver returns for their investors. So if I can do it, you absolutely can do it. And we are going to do it together. So this course is going to run from July 3rd through July 26th. And it is a mixture of 3 different things. So on Mondays and Thursdays, I'm going to be teaching a live lecture every evening at 8 p.m. I have a time block from 8 to 10 p.m. Eastern. We absolutely can use the full 2 hours. Sometimes I may not need the full 2 hours to get through the whole lecture, but absolutely can stay on until 10 o'clock Eastern every evening. So sometimes we may just have a conversation. I may just be answering different questions that students may have in our community, or I may even might even bring in some different guests a little bit later down the road. So 8 p.m. Eastern is where to be every Monday and Thursday. On Wednesdays, I'm going to be hosting office hours at noon Eastern. So 12 p.m. Eastern, you can find me on this same platform from 12 to 1. And I'll just be available to answer any questions that you might have. If you just want to sort of just chop it up for a little bit, that's all good too. But you can absolutely find me here at 12 p.m. Eastern every Wednesday. And then lastly, study halls. So study halls are going to be something I'll be a little bit experimental with, in that for study hall, I actually plan on live streaming that out to Twitter, LinkedIn, and maybe even Instagram. But in study hall, it'll just be a place where we can sort of read and react to different content that is on the web. So there may be some hot topics, some news that just came out. One example of something might be Gumroad actually now paying dividends. It's like a big thing on Twitter right now. So in study hall, we can actually go through and actually review the investment materials from the Gumroad deal and see how that was structured, so that you can understand how to look for some of those things in future deals. If there's ever a time where I need to reschedule, I will absolutely let everyone know. I do not anticipate any issues arising, but sometimes life happens. So This whole course, all of the content is going to be housed in a platform that we use called Circle. So if you're tuning in on your phone, on your iPad, you may have downloaded the Circle app. You can also just view by web browser, but everything will be in the Circle app. We have the course calendar. All of the links are attached in there. Anytime a link gets updated, it'll just automatically be updated for you all there. Office hours and study hall will be the same thing. And then all of the recordings will be automatically posted to our platform. So the name of our community in Circle is BVP University. So anytime you need to look for what we've got, you can go in there. There's also a section called Study Hall that you can click on, and all of these resources will be posted in there. Different articles, different tweets, LinkedIn posts from other people who are not even affiliated with BVP, but who have put out really great content that speaks to the power of angel investing and being in this space. So if there's ever anything that you want to share with the community, you can, of course, chat with me in this platform or leave a comment in any of the posts, and I will make sure that I get that resource uploaded as well. So again, this is a community, and we are going to have some fun together. With that being said, I do need to mention this disclaimer, which is that all of the content that I cover is for educational purposes only. Any companies I talk about or we discuss, they should not be construed as investment advice. It's not a recommendation, an endorsement of any company. It is simply to educate everyday people about how I view these opportunities, how investors view these opportunities, and how you can get involved if you so choose. You absolutely could choose not to get involved, and that is a strength of being an investor as well as saying no. But at no point throughout this course will I ever say, here's a deal you should absolutely invest in. If I do, you can call me out. But that's not what we're here for. All right. So jumping into it now, let's talk about some key terms that new angel investors need to keep in mind. I consolidated this list, and I think in future sessions, I'll need to have multiple slides with multiple definitions. But today, I think these will cover the gist. So the first is angel investor. What is an angel investor? An angel investor, for our purposes, is anyone who invests their personal capital into privately held businesses. All right. Anyone who invests their personal capital into privately held businesses. Now, I say for our purposes because the rules and regulations, as we will discuss very soon, have very recently changed. And just 10 years ago, if you said, hey, I'm an angel investor, anybody who knew what that is going to assume that you're a multimillionaire or billionaire, because angel investing in privately held businesses, was only reserved for people who were individually wealthy or people who manage the money of those who are already individually wealthy. Thanks to the Obama administration with the Jobs Act, now investing in privately held businesses is way more accessible. So thanks to that administration, now anyone can get in on the fun. So for us, always know that anyone who's investing their own money into privately held businesses is an angel investor. So that's a mindset shift that some people are going to have to make. Regardless of how much money you're investing, whether it's $100, $500, $10,000 or more, we're all angel investors. Now, what's a startup? A startup is an early stage privately held business. All right. So for our purposes, a startup is any early stage privately held business. So a startup for us is not a company like Airbnb, because Airbnb is, well, let me use Uber. Uber is not a startup because Uber is now listed on the stock market. You can buy Uber shares and add them to your stock portfolio. Uber has gone public. Uber is no longer privately held by just the owners and their investors. Now it's anyone can invest, whether directly through the stock market or through, what do you call them? Fractional shares, even. So for pennies, you could buy a piece of Uber. So Uber is no longer a startup, but it once was. The companies we're focusing on here as angel investors are pre-IPO. They've not gone public. They're in the early stages of building out their products, their services, whether they are still ideating around what to launch, or they've just recently launched and are seeking capital to scale and acquire more market share. Those are all early stage companies. The owners of those businesses are the founders, any angel investors that they've brought on board, any venture capitalists that may have invested as well. But these companies are not going to be listed on the NASDAQ. To be able to own equity in one of these companies, it's likely that you have to know the founders, or as we will discuss, you have to go through an investment platform that is regulated. Now, what is equity? Equity is an ownership stake in a business. So whenever we say equity, whenever I say pay me in equity, we mean pay us in ownership. Ownership is what this thing is all about. Ownership is a seat at the table. And ownership looks like a lot of different things. It sometimes looks like control, but when it comes to angel investing, we're really talking about minority ownership. We're not talking about any significant ownership stake that is going to give you control to change any dynamics about the business you've invested in. You are simply along for the ride. And what is the ride? Well, it's going to look a lot different because businesses operate in different industries, different markets, they're at different stages. They have different teams, different hiring strategies, marketing strategies, all those things. But before you invest in that company, they're going to offer whatever their deal terms are. So the deal terms are investment agreements between startups and their investors. So if you are interested in angel investing in a company, you'll know what you should be getting in exchange. So that doesn't mean you'll know exactly how much money you'll make, but you'll know what you've agreed upon and what the company has set out to do. So you'll know what business you're investing in. You'll know what or how much equity you'll be getting in exchange for your investment. Or if it's not an equity deal, you'll know in regards to a debt deal, you'll know how long it should take before this business starts repaying you. You'll know what any interest rates are, and you'll know what's going to happen if this company does not repay you or all of its investors. So these are really the basics here, but everyone in our community is an angel investor. We as angel investors invest in and support early stage startups. And by the way, those startups could be technology startups, building apps, building websites, building Web3 universes, but they could also be local small businesses, coffee shops, construction companies, any privately held business, real estate, even as well. For the most part, throughout this course and community, we'll talk about technology startups. But the mindset, the methods are all the same. So you can apply it to real estate deals. You can apply it to small business deals. And I will also break down ways that you can invest depending on the opportunities that are out there. You can invest in venture capital firms and organizations that invest in startups themselves. Backstage Capital being one. I'll break down that case study as well. But again, with all of these deals that you're going to be looking at, they will have investment terms that you, as the angel investor, need to review alone, I would say, first, but then seeking outside counsel, speaking to your accountant, whoever you need to speak to make sure that it is something that fits your mission, your goals, personally, financially. You want to make sure that you do that. But you as the angel investor are the one making the decision. No one else can make the decision to invest in any of these startups for you. Now, why should you even consider becoming an angel investor? The big reason, most obvious reason, is you probably want to do it for the potential of receiving very large and significant financial returns. So there's a gentleman I'll speak about in a future class by the name of Jason Calacanis. And Jason Calacanis is one of the world's most famous angel investors who invested in Uber when it was a startup. And he invested maybe $25,000. So that's a lot of money. It's very significant. But that investment, combined with the value he added as somebody who actively would share resources and his network and advice with the founder, led to the company eventually IPOing and being listed on the stock market and turning Jason Calacanis's net worth into over $100 million. All right. So a small investment into a highly scalable, high growth potential startup that ended up doing very, very well is what turned Jason Calacanis into a very wealthy individual. All right. So you may hear stories like that. There are people who get in early and then they are along for the ride, which could be anywhere from 1 year to likely more than 10 years before they see their money back, if they see any money back ever. But the rewards for angel investors can be truly that significant. It's not even possible to receive that type of return when it comes to investing in the stock market itself. So angel investors are looking for those big exits, those opportunities where their investment comes back to them in multiples. All right. So as we'll discuss, angel investors, venture capitalists, they're looking for at least a 10x return on their investment. So if they invest $1,000 into a deal, they're at least expecting 10,000. And realistically, they want much more than that. And thanks to how startups work and how they grow, they can grow over time, those returns are possible. So that's one reason you might want to become an angel. But not only that, not only the financial reason, as an angel investor, you really have the opportunity to support innovative startups, to support founders that are building solutions to everyday problems, to big problems, to important problems, to life-saving problems. Like they're life-saving solutions. They are not just sitting around and accepting life for what it is, but these are entrepreneurs that are going out and they have the audacity to believe that they can change something about the world with their creation. You have the opportunity as an angel investor to support their visions, to support their missions, whether it's, for the most part, we're talking about for-profit ventures, for-profit companies, but think about it like supporting a nonprofit. Nonprofits exist to help build a better world and make sure people get access to resources and clean water and healthcare and all these different things. Well, you donate to nonprofits, you feel good. You can invest in startups and feel good. There are founders building very important solutions that just so happen to be profit generating. All right. So that's how I view angel investing is, yes, I care about being wealthy, not just for myself as an individual, but to be able to provide the life that my family deserves, but then also to leave a legacy. And if investing in startups is what allows me to do that, then that is the most beautiful thing, because I'm already passionate about supporting these innovative entrepreneurs who are building really incredible solutions. So that may be a reason why you become an angel. The third reason might be you want to access a diverse network. I can tell you that once you get into the startup space, if you're an entrepreneur, networking is key. But once you get into the startup space as an investor, you start meeting some really interesting people who share similar passions, who maybe even see the world differently than you do, but you're able to start understanding how different people think, why people put money where they do, and how you can start expanding your worldview as well. And what you learn after you get started as an angel investor is, of course, investing alone is great. It makes you feel good. But once you start investing in startups, then you start wanting to share with your network, the people you know, the people who you think would really be interested in this particular company or the mission that it's operating in or the problem it's trying to solve. And you can collaborate with other people to help these startups get access to resources that they need. So these are just a few reasons, but if you've not already invested in your first company, you're going to want to ask yourself, why do I want to do this in the first place? From there, of course, you want to determine what your goals are. So whether it's personal or financial, I think it's important to be clear. So when I went through my background and all, I had, how much capital I want to source to entrepreneurs, how many people I want to educate, and why that's important to me. Right. So there's personal reasons and there are financial reasons. So one day I plan on managing a $100 million venture capital fund. All right. That is something I see in my future. So the companies I invest in today, ideally, will allow me to generate the revenue, the capital that potentially I'll have the funds myself, and I can deploy those funds based on my thesis. But the more likely scenario is that the companies I invest in today contribute to my track record, and then I can point to those different outcomes that I've gained over time, and then other investors in the future see this is someone who knows how to allocate capital to high growth potential companies, so I want to invest in his fund. That's part of my goal as an angel. Also supporting the community I care about. But whatever your goals are, they can absolutely be personal. They do not have to be as big as $100 million. They could entirely just be, I just want to help some founders that I know in my community. But it's up to you. From there, you're going to want to think about what is your desired commitment level. And I say that because there's sort of, I guess, two different ways to think about this. How committed you want to be as an angel. You could be passive in that you have capital, you decide to invest in a startup, and then you don't want anything to do with it. You just want to sort of give and go and wait for the return. All right. Maybe you want to invest in just one deal. You just want to invest in one company. That's a great goal. So that doesn't require a lot of commitment because you're going to find that one deal, invest, and then you've achieved your goal. You can relax. You can sit back and you don't have to worry about finding more deals. Now, for others, you may want to be a more active and involved investor, meaning maybe you want to invest in one new deal every quarter, right? So by the end of the year, you want to have 4 deals. So you're actively looking for new deals, you're actively reviewing deals, and maybe even you want to go beyond just being an active investor. You want to be a value add investor, and you want to support these startups. You want to, maybe you join their board of directors. Maybe you support them with their marketing efforts. In some way, you open more doors for them. You help them grow. You help them scale as an angel. But that's totally up to you. So some investors are very passive in that they want to just invest their capital and let the founders do what they do. Other angels are going to invest their capital, and then they're going to be working as hard as they can to make sure that this company, one, succeeds, but at least in the near term, just has access to the resources you believe you can provide to them. All right. So with all of that, you just have to think about the impact that you want to have on the startup itself, because the reality is being a startup founder is incredibly hard. It is not for the faint of heart. And a lot of times founders are operating with little to no funds. So you as an angel, you know, the term angel truly does live up to that. You are somebody who can come in and sort of, you know, save this business. You can provide it with the resources it needs to get off the ground and figure things out, to experiment, to continue to even fail and learn and iterate over time, and eventually figure things out to the point where, you know, sometimes the thing that you originally invested in transforms into something different. But that transformation comes about because you as an angel investor were able to provide this startup with some capital to get to that point. So you want to consider those things. I think the easiest way to really keep going as an investor is to align your strategy with your passions. So maybe there's a particular industry you're passionate about, whether it's you really love healthcare, or even financial services. Maybe you care about animal well-being. There are startups, technology companies, small businesses operating in all these different spaces. So when you're able to find things that align with what you are already passionate about, it's going to be really easy for you to want to get more involved, and then to maybe not even just invest in one company you really love, but just exploring and finding all these new ways of supporting even more people, specifically in an industry or a space that you care about. Another way to align with your passions is supporting founders that share your values. So maybe it's not even the company itself that you're investing in, it's the founder, it's the person behind the business, and you just really love who they are. You really enjoy how they see the world. They inspire you, and you just want to help however you can. And then lastly, maybe you find joy by contributing to positive change in the world. So I think for any angel investor, I highly doubt There are people who invest their capital into a business because they're like, oh, this business is really going to cause a lot of problems in the world for some people, but it's going to make me rich. I don't know that there are a lot of people that think that way. Most angel investors believe that the founders are building something that is truly going to create a positive change in the world in one way or another. So you want to think about all of those things as you get started in this journey. Of course, the most important part about being an angel is the investment capital. So you need to have money to be an angel investor. You have to invest in at least one deal to be an angel investor. You have to invest in at least one privately held business. Now, does it take a lot of money? No, it does not. But you have to think about how much you are, one, willing to lose, and then that will tell you how much you're willing to allocate to angel investing. As I mentioned, investing in startups is highly risky. You will likely invest in a portfolio of companies that the majority of them go on to either produce no returns for you or totally fail, meaning they go out of business, they're non-existent anymore, right? But a small subset of those companies are going to go on to become successful, ideally. And in the venture world, those successes make up for all of the lost companies, the lost investments. All right. But the reality is you are going to lose money in one way or another. So think about what you have today. With the platforms we're going to discuss throughout this course, with the regulations that exist today, many investment opportunities are accessible for as little as $100. I've even seen some as low as $50 on certain platforms. But $100, it could be a lot to you today. So you have to think about what your financial situation is today and how much of your savings, how much of your paycheck you're willing to allocate to being an angel investor. So since some deals are accessible at $100, which, you know, $100 in reality is not a lot of money. If you have a job, you're going to make that back in no time. But of course, you have to live. You have to pay for food. You have to pay for rent. I understand all of that. So at the end of the day, if you're living paycheck to paycheck, $100 could be very significant. All right. So with that, maybe you only want to invest in one startup a year at $100 because you can't afford to lose $100 5 or 10 times over the course of a year. All right. So you have to think about what you have. Maybe you have significant savings. Maybe you have, some disposable income. And you really want to get into the space and you decide, you know what, I'm going to allocate maybe 5% of my annual salary, 5% of your net worth, however you want to calculate it. You decide I'm going to allocate this percentage, which is small in relation to all of the money that you'll make throughout the year. And you want to allocate that small percentage to investing in some risky startups that you have decided actually have high growth potential and could create a significant return on investment that you are comfortable with. So that decision is for you to think about, but it's going to require your money. It's going to require your time, your energy. So think about how much you want to put in. Do you want to be a passive angel that only invests in deals when somebody sends you something and it comes with, a significant referral? Or do you want to be somebody who you do your own deal sourcing? You're the one that's going out. You're going to events. You're going on all the investment platforms and you're reviewing various deals that are out there. That's its own level of commitment. That definitely takes time and energy. And then when you find a deal that you like, it's going to require your capital. So thankfully, like I mentioned, there are deals that are accessible at as little as $100 per investment. So in reality, as an angel, you want to think about getting started without a lot of risk. You don't want to see you don't want to invest, thousands of dollars into your first deal. You want to make some small bets here and there to get started, get a feel for it. And then as you learn over time, you'll build your thesis, as we'll discuss. And deals will always be out there. Deals will always be coming at you. Once you get started investing, you will see that there's FOMO, fear of missing out on certain deals, just because of all the hype surrounding it, or other co-investors who are in on the deal, or whatever it might be. But more deals will come. Startups will always need money. Startups will always be raising. And you don't want to get to a point where you invest in one or two deals and then that was your whole allocation. That was all of your angel money invested into those deals. And then you see a third deal and you don't have the funds to be able to invest because you sort of invested too quick in those other deals. You'll learn very quickly that deals are popping up every day, and it's really a slow and steady journey. So with that, it's also important not to stop yourself at thinking about your money, but think also about what expertise do you have that you could share with this startup? Could you help them with marketing? Could you help them with legal? Could you help them with connecting with other potential investors? What connections do you have? What knowledge do you have that you can share with this company that, again, will hopefully multiply your investment over time? Another term that is not typically used with angel investing, it's typically used with venture capital investing, but for our purposes, these are interchangeable. Your investment thesis is going to be your focus area. So for a lot of venture capital firms that go and raise other people's money and then invest that money into startups, these venture capital firms develop a thesis that lets their investors know, we are going to be looking for these types of companies. We specifically invest in these types of startups and nothing else. So for you as an individual, you may want to start drafting your own investment thesis, right? Like just your statement on, I want to invest in companies that are specifically in this sector or industry, or maybe this geography, whether it's, US based companies. It could be companies on the East Coast. It could be companies on the West Coast, Midwest, down South. Or maybe you want to focus on investing in Africa. You want to invest in Nigerian startups, right? You want to invest in, there are companies all around the world, companies in the UK. And depending on your network, the types of deals you're able to see, you can gain access to these different types of startups. Maybe you're someone who's really passionate about making sure that there's gender parity when it comes to access to capital. So, you see the statistics around, I think it's between 20 and I think women founders receive between 20 and 30% of all VC money that's invested in privately held businesses. And you want to help them get closer to 50%, right? Maybe your thesis is, I specifically invest in, woman-owned businesses, women-founded companies. That could be a part of your strategy. Absolutely. It could be anything. For me, being a Black American, it's important for me to invest in other founders who I relate to culturally, right? And for clarity, I invest in all types of founders, but being a Black founder, I have my own experiences. I know what it's like. And a lot of times I can relate to founders in ways that other angel investors and other venture capitalists cannot. And that's a part of my value add. So that's important for my thesis. All right. But whatever the deal is, you're going to want to lean on your thesis so that you can also determine, does this deal fit in with the portfolio I want to build? Because in a future class, we're going to talk about how investing in one startup is not a winning strategy. You want to build a diversified portfolio. Whether if you're in stocks, maybe you already know that, but you should not put all of your eggs in one basket. You shouldn't invest in one startup and think, yep, this is going to be my Uber and I'm going to ride off into the sunset on this one and I will be good. That's not how it works. You're going to need to see really, a lot of different deals, and you're going to have to build your own evaluation criteria that you can lean on to make sure that you, one, do your own research, but also are investing in what you've deemed to be appropriate, relevant, and important to you. Just a few more slides in this section, but you want to think about how you want to evaluate risk and return. With every one of these investments, there is a risk reward trade-off. The risk is high. The statistics say that more than 90% of startups are going to fail in one way or another, right? But that means that 10% are going to win and succeed. So when you get started as an investor, you have to know you're going to lose money. You're going to lose money. Anybody who teaches you about investing, who says, yeah, I'm going to teach you how to invest in companies, and these companies are only going to be profitable, they're only going to be successful, I would not listen to that person. Investing comes with risk. Risk means these companies can fail. They will fail, but some will win. And hopefully together, we're doing our research and sort of figuring out which signs and signals point to which companies are more likely to succeed. But failure isn't always the founder's fault. You want to think about how high and how large this company can actually grow and scale, right? How much market share it can even capture. Even if it had all the money in the world, how big of a business could this be? But then things outside of everyone's control include market conditions. A recession could come, a depression could come, a pandemic, a lot of different things. A hurricane could come and destroy someone's office, and now that business is out of business because all of their stuff is gone. Data breaches, hacking, all these different things can happen. Even if you see the greatest business in the world, things can happen. There's risk with every company, every investment opportunity. But again, hopefully you are in it for the long haul. Hopefully you are in it for more than just the financial returns. You're in it for the joy of being along the journey. And with that, you should be more comfortable with the risk return. And then lastly, you want to come back to your why. You always want to think about why you got started, because I can tell you before the Gumroad update that I mentioned, being notified that I'm receiving dividends for my investment, I actually had a company say that they put out a message to all of their investors, and they said, hey, we are shutting down for various reasons. right? And that was, you don't want to hear that. It's not something you're proud of, but it absolutely comes with the territory. And the only thing that's going to keep you going when you get those failures is thinking about, why did you get started? Did this company perform? Like, did it at least attempt to achieve its mission? If so, it probably put up the good fight and you helped it do so. All right. But staying true to your purpose, to your values, that's what's going to allow you to sleep at night. Like, you know what? I enjoy this. I'm helping in ways that make me feel proud, make me feel fulfilled, and I want to continue along with this journey. So along the journey, you're going to refine your strategy. You're going to learn a lot. You're not going to invest in every deal that you see. For me, I was like, I need to invest in this one and that one and this one and that one, just to build a portfolio that was a little bit diversified across industries and hopefully would give me some more clout within certain spaces. But then you start to see that, what's going to really keep you going is investing in the companies that speak to you and align with your mission and values. So with that, I'm going to pause and take a little break. The second part here, I'm going to talk about the rules and regulations you need to know before you get started investing. So that's really important, because in our future lessons, we're actually going to be looking at different deals, and depending on where you fit on this spectrum, that will determine sort of